Hello to all the friends joining us. In this video, I want to teach you a unique strategy that uses a combination of two amazing indicators. However, you can also use the first indicator on its own. But to increase accuracy and reduce errors in our trades, we use the second indicator. Towards the end of the video, I'll also share some tips and tricks on how you can increase your accuracy and profits while significantly reducing errors. So stay with me until the end of the video with high attention and focus. As usual, we go to the TradingView website and select our trading symbol. You can backtest and forward test this strategy on any symbol you trade, whether in the Forex market or digital currencies, if it suits you. Was profitable, use it in live trading as well. For this tutorial, I am using the trading symbol Teller, and will demonstrate it for you on XAUUSD. Let me also talk about the time frame, WAN, right at the start. You can test this on any time frame you want, and it yields very good results even. On the 1 minute time frame, I have tested this strategy on 5 minutes. It worked very well. You should definitely test it. As I told you, we need two indicators for this strategy. I want to apply the first indicator to the chart. So I open the indicator list and type the word SSL. Hybrid, I search for it and bring it up for you to see, friends. It's the first one. I click on the first one so it opens on my chart. We need to make some changes to this indicator to optimize it for the strategy we want to use. I go into its settings, and in the style section I scroll down and uncheck these two boxes. These two boxes are for the faint moving averages. I uncheck these two and confirm. As you can see, this is the indicator view that we have applied to our chart. This indicator has a series of arrows which are blue and red. You can see one here. Red is for downward trends, and blue is for upward trends, issuing a buy signal for us. And there is a moving average type. It moves along with the candles, which are in two colors, blue and red. Blue indicates an upward trend and red signifies downward trends. We also observe a series of dots within this indicator that move along with the candles. As you have probably noticed by now, we are going to use these arrows to make trades, whether for upward or downward movements. However, this way it might have many errors. For example, here it gave a signal for a drop, but it didn't drop and went up instead. Or here it showed a simple blue arrow indicating an upward trend, suggesting we would experience an upward movement, but you see it dropped. So, what can we do to filter these out and not use them in our trades? We need a second indicator which we should apply to the chart. So, we open the indicator list and search for the term QQE mood. As you can see, the third indicator is the one we are going to use in this strategy. We click on it to apply it to our chart. We close the indicator list. As you can see, this indicator appears at the bottom of the chart, and we don't need to change its settings. We leave it as the default. There is a horizontal line and 0, and a series of bars that point upwards and are blue, indicating an upward trend for us. When these bars are pointing upwards, we have an upward trend, and conversely for the opposite. The red bars are located below the 0 line, which indicates a downward trend. Now, friends, how can we get an entry signal for our trades? With a few conditions that have been created for us, we can enter a trade and capture some really awesome profits. After the blue and red arrows are triggered by the first indicator, we need to come and look at the second indicator. Our second indicator should turn gray and clearly show us signs of a trend change. That's when we can enter the trade. After the signal is triggered by the first indicator, which is indicated by these arrows, blue for upward and red for downward, we need to go lower and also look at the moving average to see if it changes color or not. Look friends, for example, here it has issued a downward arrow for us, which means we can take a sell position here. As you can see, this moving state hasn't turned red and isn't showing us any trend changes. After we sense these two changes, we need to look at the second indicator to see if it has turned gray. You see friends, let me enlarge this indicator a bit so you can see it more clearly. You see friends, there are a series on none of gray bars right here. These bars also need to show us a trend change so that we can say we are entering a different trend. As you can see here, it has shown us a bullish signal, and the second indicator has also come and is confirming the same. This moving average here is also showing us the trend change, and our candles have also come on this then moving average, and here we can clearly understand that the trend is changing and we can enter a trade. Or for example, right here you can see friends, the arrow has been issued and this moving average is confirming the same, and the second indicator has turned gray and is showing us the trend change. As you can see, we could have made some really impressive and very good profits from this strategy. Definitely friends, apply this to the charts you are trading on and test it to see if it really works for you on that symbol or not. Before I explain how you can filter the signals and identify the fake ones to avoid entering trades with them, let me tell you that if up to this point the training has been practical and useful for you, make sure to like the video and write your opinion in the comments for us. If you haven't subscribed to the channel, definitely join us so you can benefit from the training as soon as possible. Well friends, now how can we filter the signals it generates? Look, friends, for example here, it has turned blue and indicated that we are going to experience an upward trend. But when we look at the second indicator, we see that there is no trend change and its bars remain red and have not turned gray or blue, so we shouldn't enter a trade based on the signal that the arrow has issued. And even this sudden moving average here does not show us any trend change. So we can easily decide to refrain from taking a trade, but in these areas where the signal has been issued, we can be more attentive as the trend might reverse and we should be alert in case the trend changes. For example, friends, see in this section it has issued a decline for us, which we can enter the trade here, but pay close attention to one point. No, we actually see on the chart that there has been a lot of decline. Now here the decline has been small, but in other parts of the chart which you can look at, you will understand my point. It is practically at the end of a trend, and where it is giving us a signal, we can use this part. So what happened, friends? For example, it gives us a signal in these places, but a lot of the trend has already passed. When this signal is issued, we no longer trust that part, and we don't take it because it is practically at the end of the trend. And friends, we can avoid using this strategy at times when news is released. For example, 1 or 2 hours before the news is about to be released and 1 or 2 hours after the news is finished, we can completely avoid using this strategy because it might result in a loss. But if you are risk-tolerant individuals, you can enter with a smaller volume, and if you see that the event is really happening, you can increase your volume. Or, as I mentioned, you can completely filter out that part and not enter the trade at all, just sit back and watch. And even during times when the market volume late at night and during times like London and New York when there is volume in the market, you can execute your trades there. Well, my dear friends, I have told you everything you needed to know about this strategy. I hope you can use this strategy and gain profits for yourself. If this video was useful and practical for you, be sure to give us a like. And until the next videos, may God be with you and protect you.